You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Friday, May the 12th, and we've got a great show for you today. Here's what we got coming up if you're watching live. Today we're talking about IBM, Apple, Square, and WWE, specifically the WWE Network. So if you're watching live, that's what we're going to be going over. If you're checking out the recap, those are the other videos that are going to be posted up today. So let's go ahead and jump right in. Okay, that's a good question. Yeah, I wanted to do we could do some discussion here at the end of the show here. I'll do a whole other segment on that. So the question is, why would you buy a relatively risky 2% dividend stock if you could buy a safer 4% dividend stock? It's to kind of diversify what you have. And I don't have the most diverse portfolios out there. You hope for them to go up. You could just buy a safe stock, relatively safer stock like AT&T that pays a 5% dividend versus a 2% one, but you do want to diversify and you factor in what kind of growth the stocks may have. Personally, I think WWE is cheap, and they're a monopoly, so they have a lot of opportunities, and 2% is nothing to sneeze at. It's way more than a savings account's going to give you. This is the portfolio. This is my kids' portfolio I'm pulling up here. Kind of the whole point of the show is every month I invest $100 to kind of show people, $100 each month investing over time, you can really build a good portfolio. And I focus on things that pay dividends, and some of the higher paying ones are GameStop, AT&T, things like that. Qualcomm pays a pretty good one. But this isn't the most diverse of portfolios. This is primarily video games, technology, and entertainment that I invest in, but you get a little bit of diversity when you're investing in WWE versus AT&T. Two very different businesses there, and both pay you. So if you're going to invest in diversifying different stocks, you're going to get some different dividend yields. Long-winded answer to your question. Any other questions you got? Comments on any of the stocks that we invest in? Always curious what people think. And a lot of people don't like the GameStop pick that I've had. I've had a lot of people that have done trades with the GameStop to make a bunch of money. They're up. They're on a pretty good run since they announced their last earnings. They're beaten down yesterday and a little bit today because of retail's what they're putting out there, but we'll see. NOK, you've been in it since $4.40. Let's pull it up. Take a look at it. Nokia. You said you got in at $4. Nice. They've been on a little bit of a run lately. What's been driving Nokia? As you've invested in Marty, what have they been? I haven't really followed them and what they're getting into. Are they working with anyone or? Yeah, 5G. Okay. Are they working on? I'll probably pull up. Yeah. Are they working on some of the cheaper phones in the emerging markets, or? Okay, all right. I might have to do a whole full blown look at Nokia. They've kind of see so many of these stocks they drop off the radar. Um, as you start looking at other ones and you get interested in them, you kind of your blinders go up, and you forget about some of these other companies that are out there. One of them, like BlackBerry, I can't believe BlackBerry's still around, and they've been skyrocketing lately as they've kind of transitioned into a software business. Now, by no means would I be an investor in BlackBerry, but BlackBerry is, I think they're up like 14 or 15% recently. Let me pull them up. Since I did an article on them, they actually won a settlement from Qualcomm, and they are spiking on it. They survived. I had thought they were just going to flat go out of business. They survived, and now they are thriving. Let's see if we can pull it up here. Of all people, BlackBerry. Who would have thought? Oh yeah, you're into good. Yeah, BlackBerry right after the Qualcomm's settlement. They're actually on my don't like list. I didn't understand what they were doing, and they are up almost 16% now. You can see right over there, BlackBerry, 16%. They are one that's on fire. Ubisoft. I rarely have anything good to say about Ubisoft. I don't like their games. I think they're broken. Vivendi is trying to scoop them up. They're up 25%. And it seems like every time I do a story on the stocks, or I'm like, boy, I don't like this. I never invest in this. Boom, they're popping left and right. So the average of my don't likes is, 7%. They're up. So if you follow my likes, I think that I was peaking out around 15% return. Don't likes are 7%. And actually, I kind of hold myself disciplined to the buying once a month for my kids' fund, so I miss out on some of the buys. My don't likes are actually beating that because the kids' fund is only up like 5%. So go figure. But I think if you're doing a show like this, you should be open about gains and losses. Certainly, you make mistakes or you miss one, you gotta point it out. So, but I think I'm going to wrap it up for today. Hopefully, I can get over this cold and we go in through the weekend. But thank you very much for watching. If you're watching the recap videos, give us a thumbs up and subscribe if you haven't already. We are pushing to get that 100 subscribers. We're just starting out, trying to grow here. Love it. That'd be great this weekend if we went over the 100 subscriber mark. Let me know your thoughts, feedback on the show. Really want to grow it. Let me know the types of articles you like to see or some of the videos we do. Put it all in the comments. We're trying to figure out the best blend of stories to do during the show and things like that. So thank you for watching. We're live 1:30 Eastern, 12:30 Central. Tweet us at InvestorXP or shoot us an email. It's mail@investorxp.com. We'll see you Monday. Thank you for watching.